Singtel has reported high underlying net earnings for its fiscal half-year, boosted by strong performances from its regional associates and Australian unit, Optus. Southeast Asia's largest telecom firm saw its underlying net profit rise 14% to 1.35 billion Singapore dollars for the 6 months ended September, or including an exceptional gain from the sale of a partial stake in Airtel and the InTouch Gulf merger. Overall net profit would rise to 3.4 billion Singapore dollars. And Singtel has announced an interim dividend of 8.2 cents per share. That's up 17% from the same period last year. CEO Yuen Kuan also expects its data center business to be another bright spot. The company revising its earnings guidance, now expecting operating profit to grow between high single digits and low double digits. And CNA's Roland spoke to Singtel Group CEO Yuen Kuan in an exclusive interview about the company's push into data centers.
Data center is one of our growth engines. We will look at it both growing it organically through Nexera and inorganically looking at opportunities. We have also confirmed that we through a consortium, we are engaging in discussion with the STT GDC data center. But at this stage in time, we have not confirmed that there's any transaction that we can announce. So this is something that is still being discussed, and if and when transaction is confirmed, we will make the necessary announcement. But having said that, we still continue to believe in data center growth. And obviously, if you look at Singtel's operating environment, we are always looking at Asia Pacific as our footprint and where we will look at business opportunities. And whether it is Nexera, which is our organic data center growth, you see that we have expanded beyond the shores of Singapore into Thailand, into Malaysia, into Indonesia, and we are looking at Japan now. And we adopt a very disciplined approach when we look at growth. In the data center in Singapore that is coming operational early 2026, we already pre-sold 54% of it. In Thailand, we are looking at our second data center build-up. And before we start commissioning the build, we already 25% pre-sold it. So in a way, we are matching that demand with our supply build very closely. So it's a very disciplined approach in terms of expansion. So similarly, if we look at any inorganic opportunity, we will also adopt a very disciplined approach. Previously, when we moved into data center, we didn't want to do it on our own. We invited KKR to take a small stake in our data center business. That is really to help support the high capital intensity of data center build. So through this partnership, we also look at other opportunities, including the STT GDC, which 18 months ago, together with KKR, we have took preferential shares in about 17%, if fully converted preferential shares into equity if we take a position on STT GDC. So we will be very careful in terms of how we expand our business and matching demand and supply.
NCS, your tech services arm, is also another growth driver. EBITDA was up 41% in the first half. You have 1.8 billion Singapore dollars in bookings right now, and your book to bill is currently at 1.2%. Are you confident that you are going to be able to meet or execute these projects on time and at cost?
No, NCS is not a new company. It has been operations in more than 25 years, right? So it is very familiar with delivering large-scale projects, and many of this, book-to-bill ratios and this billings of 1.8 billion are actually with existing clients and with clients that we are familiar with. So we know their requirements, and obviously we will be tracking our delivery every quarter to make sure that we are on time, on target in delivery. But as in any IT services, there will always be some that they are running on time, on cost, but with some slip-ups. It is the experience working with the client to very quickly address those gaps and put the project back on track again that sets us apart. I think over the last, I would say 12, 18 months, we have proven that that close collaboration with our clients have actually helped reduce what we call the accounts that are in difficulty, where we get into losses. That actually resulted in NCS showing margins expansion. So our EBITDA growth is not only coming from revenue growth, but also from margin expansions. And that proves that the business and the people are actually executing well in the